All right, admit. So start. Mhm. Mhm. So is there anybody here that know what stocks trading at all, or before joining this course, have you guys heard of stocks trading at all? Is there anyone here that's heard of stocks trading before joining this course? Mm, 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 mm. So nobody's talking. So this is AY Stocks Trading and Investment Beginner course. Then the motto is generating wealth. I want to be sure that I'm not talking to myself. Can you guys hear me?
Yes,
Okay,
you are
exactly.
audible, man. You are audible.
Okay. Thank you. So this is AY Stocks Trading and Investment Beginner course. And the motto is generating wealth. Now, what's generating wealth? First of all, just to make money and make it compound. So I will start by asking, why do you want to invest in stocks? Why stocks and shares? And then what is stocks? Like I said, yes, stocks is owning a the stocks is like, let's say Dangote has a cement business, and Dangote wants you to invest in his business, right? Then if you buy Dangote's portion, if you buy, let's say ownership, if you buy Dangote's part of business, that it means you own a part of Dangote's cement business. So when Dangote is getting a return on investment of the sales he made on his cement business, then you will be getting payment. You'll be getting ROI, that's return on investment. And I said here, stock is also known as ownership, value, or worth. In general terms, in general known terms, equity that serves as a security which represents a specific fraction of a company, which I already said. Trying to okay. Exactly. So a stock is also known as ownership, value, worth, or in general known terms, equity that serves as a security that
20,000.
represents your
20,000.
specific fraction of a company. Like I
That's
said,
about it.
please, can you, I didn't mute you all so that I can be able to consider, like, I don't want to start unmuting and muting. So I will advise that if your mic is unmuted, kindly mute yourself, please. So I won't have to get distracted when talking. Thank you. So like I said, please, can you guys confirm that you can hear me? Can someone confirm that you can hear me so I can continue? I heard.
You are audible, man.
You're
We can hear
audible.
you. We can
You're
hear you.
audible,
Thank
please.
you.
Yeah, we can hear
Okay. So like I said, owning a part
clearly.
of someone's business is owning a stock. That's what stock means, owning a share. And let's say, let me now use Elon Musk. Elon Musk has Tesla Motors, right? Now, if you say, I want to buy Tesla, but I don't have so many, like Tesla should be like $80,000. I don't have $80,000 to buy Tesla. You can buy a portion of Tesla shares. Then when Elon Musk is making return on investment, at the end of the year, you'll be making profits for being a part owner of the company, for being a share owner of the company. Now, for example, you can say, and another example is Apple stocks. Apple that has MacBook, Apple that has iPhone, has shares also. So you can say, instead of me using my first 100,000 naira or my first 1 million naira to buy an iPhone, I can as well be a part owner of the company. You can invest in Apple shares. Then when Apple is making returns, when someone else who didn't invest in Apple stocks or share buys an iPhone, you'll be earning. Because how it works is that when there are so many like demands of Apple phones, MacBooks, or even Apple Watches in the market, the price of Apple stock will be rising. So because you are a owner, not just a user, not just a consumer of Apple phone, once they are making sales, once they are improving in their products, you will be making profit. So for example, I can say I own 106 shares of Apple International stocks. And let me just read what I have here. Say shares are quantity of or the number of fraction or bits of the company you have categorized in figures or percentages. Shares are quantity. Shares are quantity of or the number of fraction or bits. Like shares are, let's say, if you say you have 106 shares of Apple, you have 106 quantity of Apple shares. Let me say you have 106 quantities. That means each one can be selling at 200 and something, 250 something dollars. That means if you have 106 shares of Apple, which means you will have, let's say, peradventure Apple is 250 something. Let me confirm. So let me confirm how much Apple is right now. So one share of Apple is around 200 and something, 250 something dollars. So let's say you have 106 shares of Apple, then it means your portfolio has, let's say peradventure, because I know it's close to 200 and something. Peradventure is 256. You say 256 times 106. So you have 27,136 $27,136 worth of Apple stocks, which means you have that I'm just using as an example. If you have 106 shares of Apple, then you can also say I own 2% of Apple international shares, or the total number of Apple shares I have is 106, right? Let's say now you have, because some people, some investors are more are the owners of the company, are part owners of the company, but the highest man with the highest investor in a company can just be said that he is the owner, because when Apple is making sales, he'll get lots of percentages. It's just like buying maybe just like buying something, and because you bought that thing with a higher amount, as you are getting profit, you get profit in a higher amount too. So that's what is stocks and shares. Like I say, stocks is buying a percentage of a company, owning a percentage of a company, a physical company. So that's what stocks is. Owning a stocks or shares, owning a percentage of a company. So let's see, how does the stock market work? What I wrote here. Simply, the stock market is made up of many traders buying or selling. Stock market is made up of many traders buying or selling. When the buyers are more than the sellers, there will be an uptrend. And once uptrend, there will be like a growth. Let's say just in general terms, growth. Then maybe the market price is going up. When the buyers are more than the sellers, there will be an uptrend in the prices. But when it's the opposite, stock prices will fall. Do you understand? When so many people are, let's say for example now, Apple stock, when so many people are buying Apple
Yeah.
stocks and shares,
Oh no, Alana, this dry cleaner is fine.
see someone this that person is still talking.
I'm saying it. Okay, no, Alana. I be want me help me run some one or two matter.
Talking.
I be want make you help me run something.
Mm. Yes. Okay. So, like I was saying, how does the stock market work? Like I said, the stock market is made up of traders who buy or sell. Then when the buyers are more than the sellers, then there will be an uptrend. The prices of the stocks will rise. But when the sellers are more than the buyers, definitely the stock prices will fall. Then when more number of people decide to purchase a company's stocks rather than to sell it, it's just like saying Apple International is a good stocks to buy. Then I tell maybe Messi buy these stocks, Abraham buy these stocks, and so many other Genevieve buy these stocks. Then as they are buying, the price will be skyrocketing because it's a good stock, and I'm telling them to buy, and it's just more like promoting it. But when there is a bad news about the market and you are telling them sell, 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 definitely the price will crash. Definitely the price will crash. So I want to use a pizza as an example. So this is a pizza illustration. Now, this is let me use Dangote's company as an example now. So this is a pizza. So Dangote, let's say cement. Let me just use Dangote cement as an example. So this is Dangote cement. The whole of this pizza is Dangote cement. The whole of this pizza is Dangote cement. And you have your $10, you have your $100, and you want to invest in Dangote cement. Then, like I said, if you own a stock, you own a fraction, you own a bit of the company. So this is a pizza illustration of the whole shares, of the whole cement shares of Dangote cement business. And you say, I would like to invest in Dangote cement. Now, this is what's going to happen. Like I said, ownership of a company is divided categorically and called stocks. Divide it. Then, like I said, fraction. Once this is like I was saying, this is Dangote. This whole pizza now, this full pizza is an example of Dangote cement business. So you say, what I have is $100, but I can't buy all of Dangote's investment. I can't invest all, like I can't buy everything Dangote has in cement. I can't invest all, or I can't invest to purchase more of Dangote cement, but I can own a fraction. I can own a bit of Dangote's business. Then when you invest in Dangote cement, because you invested a small amount, the company will give you a fraction of ownership of the business. So this pizza now is an example of the fraction you own from the company. Now, when Dangote makes profit, or when Dangote makes profit from, sorry, okay. When Dangote makes profit, or when there is a return on investment in the business, in Dangote cement business, definitely you will be earning in percentages because you got a fraction. You'll be earning if Dangote cement does extra 5%, you will earn 5% of the fraction you purchased, 5% of your ownership, return on investment. That's an example of, that's what this pizza illustration is showing. Remember I said this whole pizza now is Dangote's business. And for you to invest in Dangote's business, you don't have a lot of money to invest, but you just have a small money. And to have a small money, all you just need to do is, if you invest in it, you get a fraction, you get a fraction, a bit of ownership of Dangote cement business. So that's the pizza. That's also how it works for Apple stocks, Tesla, Facebook International, Facebook Meta, and others. So there is the World Stock Exchange, which we are going to do in the next slide. So let's check. The world's largest stock exchange is the New York Stock Exchange. I don't know if you guys have heard of NYSE, and it's made up of over 2,800 companies. The world's largest stock exchange is the New York Stock Exchange. So to be a good investor, typically you look at indexes, which are group of stocks paired together from a section of overall stock market. So it's advisable that as a beginner, you look at for indexes. So what are indexes? Indexes are companies grouped together, different companies that do different things grouped together. So once you can use $100 to buy Apple, you can use $100 just like, let's say now, you can use $100 to buy Apple. You can use $100 the other same $100 to invest in Tesla. You can use that same $100 to invest in, maybe, let's say, Nigerian stocks and US stocks are divided. So I can say you can use it to buy Samsung. You can use it to buy other stocks. Like I said, you to be a good investor, it starts with indexes, and indexes are a group of companies grouped together. So if you're investing $100, let's say indexes, like I said, are companies grouped together. So you can't. It's just like investing in a group of company. If you invest in Apple, let's say now you go to Bamboo, you say you want to invest in Apple stocks. Once you invest in Apple stocks, if Apple does -5%, your money will go down. If Apple does 10%, your money will go up. You invested in an individual stock. But because you're a beginner, it's advisable to invest in indexes. And what are indexes? Indexes are a group of stocks, are stocks grouped in a particular way. Now, if you buy an index, an example of the most popular index is Vanguard S&P 500, which consists of 500 US companies, US most popular companies. So let's say now you use $100 to buy Vanguard S&P 500. You have a share of Apple, you have a share of Tesla, you have a share of all US stock companies that you can think of. Facebook, Meta, Microsoft, and others. Now, so that's why it's advisable if you have $100 to start investing, you invest in indexes, don't invest in individual stocks. And you can invest in indexes. Maybe Apple will be going down, but Microsoft will be going up. Microsoft could be going up, and Facebook Meta will be going down. So at least if you are losing from this particular one, you are gaining from the other one. That's why it's advisable to start with indexes. An example of the most popular index, like I said, is Vanguard S&P 500. So that's the difference between investing and investing in indexes and investing in individual stocks as a beginner. Like I said, if you invest in individual stocks, if the stock is going down, your $100 will be going down. Or at least if you invest in, like, let's say Vanguard S&P 500, which contains like 500 US most popular companies. If you invest in them, Apple can't be going up, Microsoft going up, and others going down at the same time. Either one is going up or the other is going down. And as the other is going down, the one that is going up, you'll be compensated for it. So that's why it is advisable to start with indexes. Then the single stock is used to know the capacity and overall performance. This S&P 500, like I said, is used to know the capacity and overall performance of the US stock market. You can use it to check. If you buy S&P 500, you can, let's say, if S&P 500 does 5% today, you can just say, generally, so US stock market did 5% generally today, whether Apple did 6% less or let's say Tesla did 10% up. At the end of the day, if the market closes, you see that your S&P 500 is like in less than 5% or is up by 10%. You can say generally, categorically, the US markets did 10% today generally. So that's what is Vanguard S. That's the that's what I'm talking about, the Vanguard S&P 500 index and others. So let's go to the next slide. So this is the picture of the companies in Vanguard S&P 500 stock market index that shows performance of the top 500 US stock companies. So these are the companies that are in S&P 500. UPS is here. Nvidia is here. Apple is also here. Google is here. Amazon, eBay, Priceline, Ford, every big company that you can think of is on the S&P 500. HP is here. So if you're investing in Coca-Cola is also here. So if you're investing in BlackRock here, if you're investing Walt Disney, Visa, and others are here. So if you're investing in Vanguard S&P 500, know that categorically you are investing in all these coins. You're investing in Google, you're investing in eBay, you're investing in Amazon, Priceline, and all that. So that's why and Walmart too. That's why it's advisable to invest in indexes as a beginner, as a stocks investor beginner. It's advisable to invest in indexes. So like I said, this is an example of all the companies in under Vanguard S&P 500. So let's say, some other popular indexes are Nasdaq 100, which is not really like, yeah. So Vanguard, if you had asked me which one to start, I'll just say Vanguard S&P 500 because they're basically the most popular US companies that you can think of that is under Vanguard S&P 500. Then if you have a lot to diversify, you can now do Nasdaq 100, Dow Jones, and Russell 2000. Some other popular index, like I said, Nasdaq 100 big non-financial companies, Dow Jones 30 reputable companies. So if you're investing in Dow Jones, know that you're investing in 30 reputable companies. Then Russell 2000 comprised of 2,000 small companies, the ones known, the ones starting up. So Russell 2000 is comprised of 2,000 small companies. So there are also indexes if you want to try it out, but it's advisable to go with Vanguard S&P 500. So how risky is investing? So like I said, this is the best class you can be here for now. Now, How risky is investing? Before you investing, you need to know. Like I said, you always need to learn before you, and you can't just start investing without knowing what to do. So before investing, you need to know. So secondly, you need to know how to manage emotional risk. Traders, if you can win your emotion, you are already 100% there. Let's say, so you're already like 90% winning in trading. First of all, you need to win by emotions. You don't need the market to control you. And how does the market control you? You put $100, you put a $50, you keep on checking the market to know when it's going up and when it's going down. So that's why it's advisable to invest what you can afford to lose. Invest what you can afford to hold. Don't invest money you need the next year or money you need in few months. Don't invest it, because this basically, if you're investing in stocks, just know that it's a long-term investment. So don't invest money you will need the next minute and you start panicking. Are you sure I'm not going to lose? Are you sure I'm going to make it? That's emotional risk. So for you to manage your risk, first of all, you have to control your emotions. You don't invest what you don't want to lose. Although in stocks trading, you cannot lose. Like I always say, in stocks trading, you can lose in crypto, you can lose in forex, but stocks trading, stocks investment is hard for you to lose, especially if you invested in the right companies. Like I said, if I check my stock portfolio, although today maybe market closed and I might not be in profit today, but checking it generally, I'm always in profit whenever I invest in stock. My portfolio is still in profit. Maybe today, maybe market can close at loss today, but checking generally from the time I invested till now, my portfolio is still a plus. So that's why it's advisable to diversify. It's advisable to invest in stocks trading. So short-term traders risks. So it's not really, I'm not advised to use trade short-term, because short-term traders, they are always in the market checking out, can I buy Apple and sell in the next 5%? Can I buy Tesla and sell when it does 5%? So short-term traders, their risks are more than long-term investors. Long-term investors, maybe let's say now you want to be, if you it's advisable, it's very, very advisable to be a long-term investor, so that in the long run you'll be making a lot of profit for yourself. But if you're a short-term trader, definitely you might lose in a day. Tomorrow you come back again, you might lose and gain also. But it's advisable to start to be a long-term investor. You can do other things to and then invest, be a long-term investor. Then diversification proper diversification. You need to diversify properly. First of all, like I said, as a starter, as a beginner, if you want to invest, you need to start with S&P 500, S&P 500. Then, if you start with S&P 500, then it's advisable to also like start buying those stocks under that S&P 500. You can buy Apple, you can buy Tesla. All those companies like very good potential in the long run. They have very good potential in the long run. Maybe you can say, let me just use $100 to buy S&P 500. Then maybe if I got another $100, if I get another $10, I can invest in Apple. I can just automate my investment. I can buy Apple for $5 today. I can buy Apple for $10 tomorrow, or maybe I can buy weekly or monthly. So it's good to have a proper diversification. Don't over diversify, because if you over diversify, you can't even manage your portfolio. So let's say now you have S&P 500. You can also diversify, let's say, in other extra five stocks, good five stocks. It's actually, so long as you invest in a good company, definitely in the long run, you'll be making profits for yourself. Life-changing money, not really profit, but life-changing money. That's why if you're investing, you need to have a long-term mindset. So let's go. Why do you need to purchase stocks? Why do you need to purchase stocks? Like I said, buying a stock means owning a fraction of a company, like I used in the pizza illustration. And why? Because your investment works for you 247. Your investment works for you 247. More like what I call easy money, in general terms, passive income. In general terms, passive income. You can just invest in stocks and daily you'll be making profit without having to do anything. So that's why it's good to invest in stocks. Now, it grows faster than just having a savings account. Another reason why you should invest is that it grows faster than just having a savings account. Stock grows faster than just having a savings account. You can just invest 5K today, next week you invest another 5K, or in a month you can invest another 5K. Just build your portfolio over time. And as you build your portfolio over time, it keeps on growing. So that's about why do we need to protect. Like I said, your investment works for you 24/7. You earn passive income without having to do a thing, or you just need to invest and let your money do the job. It grows faster than just having a savings account. Rather, have your money work for you. I mean, who doesn't want their money to work for them? You can't continue to work hard every blessed day. At least you should have something working for you. Then for people, we can also retire. It helps you retire early and live your dream life. So that's it. So get let's get so for people. I don't know if anybody's taking notes, but I'll still give us this. I'll give out this PDF, and I'll also send you videos on how to down on how to create an account for the investments. So your financial goals. Start small, start now. 1,000 is not small, 2,000 naira is not small, 500 naira is not small. If you save, if you begin now to save 500 naira, let's say in the next 1 year, let's say we have 366 days, and you save 500 every day times 360. In the next 366 days, you having once it's 3,000 naira. But if you say 500 is too small, I can't say 500. I'm waiting to get 10,000 to save. And you don't say, and you end up not saving at all, you're having 0 naira at the end of the year. So invest in start small, start now. On Bamboo, you can start, the minimum amount you can invest is 5,000 naira. On Bamboo, the minimum amount of you can invest is 5,000 naira. So let's say now you don't want it to, because obviously nobody wants stress. You don't want it to like to overwhelm you. You can just say, let me just be building my portfolio with 500 naira every day, or 500 naira every 2 days. Once you get the 500 naira, you can just deposit to your Bamboo account, deposit to your Bamboo, and allow it to just grow there. Maybe let's say 500, if you do 500 naira times 7, or let's say 500 naira times 10, that should be 500 times 10, that should be 5,000 naira. So maybe let's say every day you just bring out 500 naira and send to your Bamboo. In the next 10 days, you having 5,000. And once you have that 5,000, you can now purchase a stock on Bamboo. You can now purchase a stock on Bamboo. So as you start small, start now. You don't need to have all the $10,000. You don't need to have all the $2,000 to start. You can start small and you can start now. So $1,000 can turn into almost $50,000 in 40 years. I know some people might say it takes long, it's so long, it's so long. But what if 40 years come and you didn't invest and you don't even have the $50,000? I don't know if you guys understand. So you need to start now. And what you don't know is that time runs so fast. 10,000, 1,000 can be in 1,000, 50,000 can be in 40 years. But what if you get to that 40 years because you think it's so fast and you got to that 40 years, you don't have anything to write home about? You still say 40 years is still far. So it's good to invest and just forget it, whether it's still far or not far. Well, just when you look back, you will never ever regret it. Just mark my words. When you look back and you saw that you invested, you will never ever regret it. Then investing in stocks can help you pay for your dream goals. Let's say you want to travel maybe abroad, or you just want to travel and live a life of a traveler. Yeah, you want to go and enjoy. You can just, let's say, if you're in secondary school now that you're watching this, because I know some people are young like that. If you're in secondary school now, or you're in university now, and you want to maybe live a dream life, you are looking at some people traveling the world and all that, and you want to live that kind of life. As a year one student, you can start investing 5,000. As if they give you money for your cash card, if they give you money for anything, you can just invest maybe 500. Put 500 naira because you're up to 18 years. Put 500 naira, put 1,000, and be saving it. If you are a one student, you are currently, let me say, roughly, you should be 21. That's if you enter the university late. But if you enter, it should be 18. And if you start investing, in the next 10 years, you'll be 30 years. Do you understand? If you start early, the years won't matter to you. In next 10 years, you'll be 30. And in 30 years, you'll be having like $50,000. And in 30 years, you'll be like, look, you will not even be looking for a job. You just want to live a life of joy and happiness, and a life to you just want to have yourself, enjoy yourself with your family. So if you are starting late, it's 40 years looks like a lot. I don't know if you guys understand. So in the next 10, because if you're investing, have like a long-term might have 10 years or 5 years mindset. So your 1,000 can turn to, let's say 50,000 in 40 years, or even your 1,000 can turn to, let's say, 10,000 in 10 years or 10,000 in 5 years. Do you understand? So it's just like more of investing. If you invest in the long run, you will thank yourself, you will thank your younger self for trusting in yourself and making a good investment for your future. Investing in stocks can help you pay for your dream goals. So that's what it's like to invest. Have a financial goal, start small, start now, and have a return on investment in it without even doing anything, just by having your money work for you. So what's compounding? What's compounding? Compounding is when the money you earn starts generating income, right? Now, let's say that you invest in stocks and maybe you got 5%, you invest in stocks, Apple stocks with $100, and you got maybe say 5%, that's $5. What you need to do is just reinvest that $5, or you click on auto compound, and what instead of your capital to be $100, it now becomes $105. So instead of making like extra $5, you're making $5 plus 5%. You're making $5 of the $100 plus 5% of the extra $5. That's what compounding is. Compounding is when the money you earn starts generating more money, or rather starts earning money for you. And compounding is the easiest way to become wealthy. As you invest, as it makes more money, you reinvest it. It makes another money for you, increasing the profit. Like I said, the sooner you begin investing, the more time your earnings have to compound. If you're 18 in the next 10 years, if you're 18 now, in the next 10 years, you'll be like, let's say 20, yeah, 28, right? Yeah. If you in the next 10 years, you'll be 28, or is it 10? Yeah. If you are 18, in the next 10 years, you'll be 28 years. So what if in the next 10 years you started investing now? In the next 10 years, you'll be $10,000 richer, you'll be $20,000 richer, depending on how serious you took the investment. So the sooner you begin investing, the more time your earnings have to compound. Even if you are more than that age, the sooner, today is still early. If you are 30, if you are 35, if you are 31, today is still early to start investing. Because if you are, what's this name? What's this man's name? That's KFC. KFC started his company, but around 60 something. So there's no time that is actually late. Like Nibo will say, wait at about 12. So if you wake up, try to wake up and start doing. If you wake up at 40, if you wake up at 35, anytime you wake up, just wake up and start doing it. Don't say it's too late, because the mindset is actually what's old. If you have a young person mindset, you like really start doing things, bearing that you are young in mind. But if you are 40 or if you are 35 and say, I'm old, you start declining. Because as you start earning, like, I don't know, this is just distracted me. Like I said, if you have a young person's mindset, even if you are okay, if you have a young person's mindset, even if you are old, because you have that mindset, that young mindset, you start, you start like acting up towards that age of a young person. But if you have an old man's mindset, if you have an old man's mindset, you can't be able to work. You'll be saying that you are old, you are old. And the thing there is that you are only old in your mindset. If you don't mind, nobody minds. If you just want to pursue your dreams, nobody cares. You just have to pursue it. All right. So start sooner, begin investing. The more time your earnings compound, the sooner you begin investing, the more time your earnings have to compound. The more time your earnings have to compound. So let's go to the compounding continue. Compounding means, like I said, means reinvesting your interest, income, or profit to make higher returns. Reinvesting your interest, income, or profit to make higher returns. That's what compounding means. That's what compounding means. So let's continue. So you guys shouldn't worry. I'm going to send this PDF and prepare your questions. So pay yourself first. Like I said, is if you don't love yourself, you can't love others properly. You can't work and they pay you 30,000 naira, and they pay you $100, and they pay you and they pay you $500 and you don't pay yourself, you start spending on others. Pay yourself first for being able to trust yourself to even do a job that pays you. You have to love yourself first before you can be able to love your neighbor properly. So if you get a payment, if someone dashes you money, you have to pay. You don't go and start spending your money on people or start spending. Even if you have a family, at least save yourself first before saving your family. It's only one, it's only the person that saves themselves can be able to save another person. If you don't save yourself properly, you can't save others. You have to stand before helping others stand. You can't be falling and trying and just try to help someone stand when you are falling. Even the Bible says, consider the beam in your own eye before trying to remove the beam in your brother's eye. He calls them hypocrites. So let's go right. Pay yourself first. Saving 10% of your total income is a good goal. You can set up automatic transfers for when you get your paycheck. But if you're someone that has like you have control over yourself, you don't need to set up automatic transfer. If you tell yourself, if there's someone that tells yourself things and you does it, and you like, if you tell yourself something and you do it, you trust yourself, you don't, there's no need to set up automatic transfer because basically money don't come. If money comes this month, it doesn't come that same way next month. I don't know if you guys understand. So you can set up automatic transfers if you know that generally that account there will be money always in it at that particular date. But if you are not sure of how the money comes, you can say, if I get 10,000 today, I'll put 1,000. If I get 5,000 today, I'll put 500 and stuff like that. But if you are sure that money will always be on your account at that particular date, or if you want to just help yourself to be, let's say, consistent and help yourself to be disciplined, you can set up automatic transfer. But as you set up automatic transfers, also know that you are the one that is supposed to put money where maybe the broker is charging the money from. Because if you don't put the money there, the money won't be there. So if you want to be consistent, and also if you can control yourself, if you like have discipline, if you discipline yourself, you can just maybe say, if you get the money at this particular point in the month, you can just remove it from there and put it. You have to be intentional about trying to build your portfolio. You have to be very, very intentional about it. Another thing is that, another ideology is that people say, I have to eat today before doing any investment, right? You have to eat, and but you have to eat, but you don't have to eat everything. You have to eat the primary thing. If you have money, at least you have to take care of yourself. Eat the primary thing, but there are some extras you need to cut off. There are some like drinking so much soda and stuff like that. You need to cut it off. And when you're cutting it off, don't cut it off in anger. Don't say, why can't I afford? Don't start feeling bad. But if you have the future in mind when doing, know that if you tell yourself, if I buy this soda now with 500 naira and I don't take it in the next 10 years, how will I feel? Do you understand? But if you say, let me invest, instead of buying this soda, this extra soda that I don't need, I've already eat the primary food I need. If I say, let me say the 500 naira because I have the future in mind, at least that 500 naira can compound into something tangible in the future. You will be investing with a very good mindset. But if you don't have the future in mind, you just want to invest, and maybe you are depriving yourself of so that you see it yourself that you are depriving yourself of so that you not see it that you are investing in the future. But if you see that you are investing in the future, you invest with a better mindset. So even if you are not taking the soda today, or even if you're not taking the bonds or whatever today, you know that at least that money went into somewhere, something that is maybe, let's say, an asset that will, let's say, appreciate in the future. Then you know that you are going to be investing happily. So, like I said, set up automatic transfers for people who can't, yeah. Now, set up automatic transfers if you can't, like, okay, let me see, okay. Set up automatic transfers for when you get your paycheck. This is Nigeria, and definitely government doesn't pay workers the same day every month. So that's why I was putting in that you can just be intentional about it. Be intentional about, so that I want to collect 500 naira, I want to collect 1,000 naira, I want to collect 5,000 naira from every payment I receive each month. Do you understand? So I said automatic transfers won't work if you don't receive you are not sure you have an amount in where the broker is charging the fee from, is charging money from every month. So when you pay yourself first, you won't notice there is less money to spend. When you pay exactly, when you pay yourself first, you won't notice there is less money to spend because obviously you're investing in yourself, you're investing in long term, and basically it's your own. So when you pay yourself first, you won't notice there is less money to spend. Because if you check your portfolio, you smile, saying that thank God I didn't finish my money this month. Thank God I didn't finish my money. And definitely I have something that is appreciating, even if I don't have a dime in my purse. Now at least I have something in my portfolio. So these 3 steps to start investing. Every dollar, like I said, every dollar or NGN is investment in the quality of your life. Every dollar or NGN is investment in the quality of your life. So if you want to start investing, first of all, you have to build a cash cushion, let's say 3 to 12 months. You have to build a cash cushion, like cash cushion, all these saving box and stuff like that, 3 to 12 months. Once you build the cash cushion, you can say, I'm building this cash cushion to, like I said, you can, the cash cushion can also be your bamboo, can also be your, maybe your broker. You can just be saving it. You can just be saving it. Don't, and then when it compounds, when your savings compound, you can now use it to invest. Or the cash cushion can also be you saving money you need the next year. So any money you get, you start using it for investment, not for saving it for emergencies. Then, or you can also track your spending by writing it down or using online tools to help you. Example, Staywise is an online tool. You can install it from Google Play Store or App Store. Staywise, you can use Staywise to track your spendings, to track your, maybe if you buy something today, you can use it. And if you have your email with you, if you receive alerts via your email, Staywise can automatically generate all the transactions in your from your email and show you the receipt of how you spent your money in the month or how you spent your money in weeks or let's say days. So that's it. And continue. Pay your debts. Like I said, if you're owing somebody, you don't have money. If you're owing someone, you don't have money yet. So before you start investing, you have to pay your debts. The first step to be financially free is to pay your debt. Don't run from debt. If you owe debt, pay them. And next time, learn how to manage yourself because there are some things that we borrow for that we can actually like do without. So why borrow and then you start owing debts? So it's not really good to owe debt. If first, like I said, first step to financial freedom is paying your debt. You don't need to borrow. Because if you borrow 50,000 and your let's say your salary in a month is 60,000 and you borrow 50,000, once they pay you, what you have is 10,000, you don't have 50, you don't have 60, what you have is 10,000. Because you have to pay your debts first. That's the first step to financial freedom. Don't live in debt. And if you are young, because nobody says it's even up to like 35 or 40. You are young, so you have to pay your debts. Don't borrow a lot. Know that there are things you can do without. Actually, nobody cannot do without anything in this life. Know that there are things you can do without. So you have to, unless more or no, like you have to borrow. But there are some things you can survive without even borrowing. Some people borrow to buy clothes, some people borrow to buy shoes. But if you want to invest and you're sure it's going to make returns, you can borrow to invest because definitely if you can make money, you can make returns and pay the person back. Do you understand? You can borrow to maybe sponsor an activity that will yield returns, not just an activity that will just, do you understand? You can borrow to, and also borrow to give offering. You can borrow to give your Thanksgiving in church, because definitely, sure. Then last I'm saying, pay your debts. Treat every dollar like an investment. Either you're investing in yourself physically or you're investing in your portfolio. Do you understand? Then track your spend. Like I said, you can use Staywise to track your spending. So if you are young, don't borrow. That's don't like I said, don't borrow. Like even from little things of borrowing power bank or borrowing phone or borrowing water or asking or borrowing or begging, stop that. Because from borrowing power bank, you want to borrow 500 naira. From borrowing 500 naira, you want to borrow 10,000 naira and stuff. And that's how you keep building debt. So just be contented with what you have. So long if you're even if you're in school and you can pay your school fees, fine. Anybody that can pay their school fees can also recharge card. Do you understand? Anybody that can pay their school fees can also have transport to go to school. So why do you borrow for unnecessary things? So guys, don't borrow so that even if you have 10,000, at least you don't have 20,000, but have 10,000, and the 10,000 is your own. Then having 10,000 and 7,000 is not even your own. Having 10,000 and what you actually have is 3,000. So try and pay your debt and treat every dollar like an investment. Don't just throw out money like that. Treat every money you have, every naira you have like an investment. Even if it's 5 naira, I know that it doesn't have value, but if you compound 5 naira every day till let's say 30 days, it will be 5 naira again. At least it can get up to the amount you can use to buy bread, one loaf of bread. Yeah. So let's do it. Timeline. If you need the money, timeline for investing. If you need the money in the next year, it should be in cash. Don't invest money in you. Say, let's say you are planning to travel or you are planning to do something next year and you go and invest. Don't invest and you need the money. Don't invest it. Like I said, if you need money in the next year, it should be in cash. If you need money in the next year, it should be in cash. You shouldn't invest money you need the next year. Any money not needed, any money not needed the next year should be invested. And you should invest, like I said before, you should invest with a time frame of 5 to 10 year timeline in mind. So it's not a today thing. So you should invest with a 5 to 10 year timeline in mind. So 2 rules to follow before investing. Don't invest money you need urgently. Any money you don't need urgently is a candidate for stocks investment. Don't invest money you need urgently. And any money you don't need urgently is a candidate for stocks investment. One of the rule, don't invest money you need urgently. Second rule, any money you don't need urgently is a candidate for stock investment. So stocks to invest in US stocks, S&P 500, like I said, Apple International, then Netflix. I know most of you are subscribers to Netflix, but you don't have Netflix stocks. You watch movies. And as you're watching movies, I'm earning. And some other people like me are also earning if you're watching movies on Netflix. So you can invest in Netflix. You can invest in NVIDIA. NVIDIA is an AI company. You can invest in NVIDIA. You can invest in S&P 500. Like I said, you start with indexes. And the indexes I mentioned here that is S&P 500, which comprises of US most popular companies and most reputable companies. Then you can invest in Apple that has MacBook iOS. So before you buy that iPhone 16, before you buy that iPhone 12, before you buy that iOS X and XS Max, invest in Apple stocks. Then before you subscribe 2,000 naira to Netflix, why don't you think of, let's say, that 2,000 naira you're using to subscribe to Netflix, you can send it to your Bamboo and gather up and invest in Netflix. So as people are watching movies, you are making money. You can invest in Bitcoin ETF. Bitcoin ETF, BITB is a stock for Bitcoin. When Bitcoin was when Bitcoin okay. Like Bitcoin ETF was approved in January of 2024. So that was when Bitcoin started trading as stock. So BITB is a good stock investment. At least even if you don't have Bitcoin per se in crypto, you can have BITB, Bitcoin, yeah, Bitcoin TB or whatever. You can have it. It's currently trading at 50 something dollars. You can have it. Do you understand? So if you don't have Bitcoin of 100K dollars, you can have Bitcoin of $52 or $55. So Nvidia, you can invest in Nvidia, you can invest in Tesla, and you can invest in Meta Platforms International. What's Meta? Meta is Instagram, Meta is Facebook. Mark Zuckerberg is the owner of Meta Platforms. Meta is also on WhatsApp. So as people are chatting on WhatsApp, you're making profits. As they're posting reels on Facebook and Instagram, and maybe influencers are posting content on Instagram and Facebook, and you are uploading your status on WhatsApp, people are cashing out, people are making profits from Meta platforms. So you can actually buy their shares than just spending time on Facebook and Instagram and WhatsApp without earning. So that's it for stocks investment in the US stock. So let's continue. I want to confirm that you guys can hear me. Hello?
Yes, we can hear you.
Exactly. Okay,
Yes,
thank
we
you.
can.
Yes, we can
I
hear
can
you,
hear
ma'am.
you
Okay.
following.
So then stocks to invest in is stocks to invest in Nigerian Access Corporation. Access is bank now. Yeah, Access Bank. You can invest in Access Bank. You can invest in Dangote Cement. You can invest in Fidelity Bank. You can invest in Transcorp Hotels owned by Tony Elumelu. You can invest in Transcorp Hotels. You can also invest in UBA, also owned by Tony Elumelu. Transcorp, as people are going to Transcorp to swim, you are earning money. As people are maybe buying offices in Transcorp, you are earning money. As people are buying cocktail in Transcorp Hotel, you are earning money. Do you understand? And also UBA can invest in UBA. Then broker, NGN, and USA. So for people in USA, anybody in USA that is here, you can invest using Robinhood. Robinhood is a US stock trading platform. You can a broker. You can invest in Robinhood. You can also use for people in Nigeria, you can use Bamboo. You can use Bamboo, then trading 212. Trading 212. You can also use trading 212, but it's advisable to use Bamboo. Bamboo is a stock broker in Nigeria. But trading 212 offers maybe it can give you free, that's if it's still available for Nigerians, because sometimes they remove it from App Store for Nigerians, sometimes they put it back. So, but it's advisable to use Bamboo. And I'm going to send you guys videos. For people who have not created accounts, I'll send you videos on how to create an account on Bamboo and maybe fund your account. Then for people in US, Robinhood, for people in Nigeria, Bamboo. And you can also check out Trading 212 if it's still available for Nigerians. If it's still available, because sometimes they put it back for Nigerians, sometimes they remove it because they are also doing well. They are also a broker that does well. So important stock market terms and definitions. So asset means possession. This is just like a glossary of terms. So asset means possession, bear market when the price is for, bubble, fear of missing out. Bubble can also be seen as FOMO, fear of missing out. You invest because people are talking about it when it's going up. I bought, you want to go and buy. And if you go and buy at that point, they will dump on you because they bought before you. So averaging down, averaging down means buying the dip. When let's say when if Apple stock is $250 something now, and Apple falls to 200, you buy at that 200, it means you bought the dip because Apple has already gotten to an all-time high more than 200 before it dips. Then blue chip stocks are good stocks, really good stocks. Apple stocks, Tesla, Nvidia, and stocks like that. Then bond, loan made by interest percentage. Bond is a loan made by interest percentage. Then broker, a company or person who buys or sells on your behalf. Bamboo is a broker, Robinhood is a broker, Trading 212 is a broker. Bull market is price rise. Then business quarter, that's business calendar making up a year. Buy, that's buy. What buy mean? Then buy back, when a company reduces the number of their shares in the market, that means they are buying back. Capital gains, difference in value from the initial investment. That's if you invested $50 and you have extra $5 because the stock you invested in already did 10%. Capital gains is what you made. That extra $5 is what you made. That's what capital gain is. Then compound interest, additional income over time. Like I said, in compounding, when your money makes more money. Contributed, exact amounts you have added to your portfolio. That's what contributed means. Then day trading, buying and selling in a day is day trading. Dividend, dividend payment made to shareholders. Then there are some stocks that pays dividend, yearly dividends, 6 months dividend. Then this dividend payment is payments made to shareholders for holding the shares. Then at the end of the month, if the company at the end of the year, if the company is paying dividend, definitely they will pay you dividend. So that's what dividend is. Then earning per share. Earning per share means how much percentage you earn for, let's say you have 3 shares of Apple International stocks, and what you earn per share is your earning. Like what you get per share of Apple International stocks is what's called earning per share. If you have four Apple International stocks and you earn $2 for each one, that's what earning per share is. Then ETF, exchange traded funds, is the full meaning of ETF. Exchange, place where different stocks are traded. Then FANG stocks means Facebook, Amazon, Apple, Netflix, and Google are just categorized in a short form, FANG stocks. Facebook, Apple, Netflix, and Google. Then GDP, gross domestic product. Going long means long-term investment. Like indexes, I said, indexes are just like S&P 500 and the other ones I mentioned, Dow Jones 30 and stuff like that. Then initial public offering, when a company says, we are offering, let's say Apple have not even launched, their stocks, and the company comes and says, we are launching Apple for buy. we are selling shares of Apple for the first time, you can go and buy. That's they are coming out to public, telling the public that they can buy a share from Apple. That's what initial public offering is. Then liquidity, how easily you can get in and out of an asset. Liability, obligation, mortgage loan, and stuff like that. Margin, access to borrow. Access to borrow. If a stock is offering a margin, then they're giving you access to borrow. And once you borrow, you make profit, you return their capital for them. Then market capitalization, but you need to qualify. Market capitalization, overall dollar value of a specific company currently. Then and stuff, other things like market significant decline. Then you can't if private company is a company that can't be invested in the public stock market, then rally general price increase. You can say when there is a boom, I can say there is a rally in the market, which means the stocks market, the stocks market is pumping. Like there is a general rally, which means there is increase, there's an uptrend in the market generally. Then rate means real estate investment stock. Like I said, you can invest in real estate, you can invest in real estate, even if you can own a house, you can own a house without, you can own a property without owning a property, right? You can own a property without, stocks give you access to own a property without actually owning a physical property. But at least if they are making money from real estate, you are getting you are getting a percentage. So that's what's with the real estate invest stocks. You cannot buy a physical, you cannot have maybe you won't have a physical house, but definitely because you invested in real estate, you have a house. So once they're making money from real estate, they're paying you in percentages. Then recession means decline in economic performance for lasting for months. Return, like I said, profits on investment, sell sector stocks in a similar industry. Sector means stocks in a similar industry. Then secondary offering, like after the first initial public offering, then secondary offering is the second one that they do. Then continue. Net worth. Net worth is the total personal economic value. Total personal economic value. Then your portfolio, all the investments owned by an investor. Trading volume is sum up of stocks bought and sold each day. Volatility, quick movements of stocks prices. So, guys, I'll be taking questions now, and thank you for joining. If you have any questions, you can ask, and I'll also be sending this PDF to everyone in the broadcast list. I'm saying, so you guys, if you have any question on how to get started, on what to do, and maybe regarding anything regarding earning, sure, then you can ask your questions. So, okay. So big JP, you can ask your question. I'm asking you to unmute. So big
Good
JP, you
evening,
can
ma'am.
ask your questions. Big,
Yeah, good evening, ma'am.
good evening.
Ma, yes, ma'am. Ma, please, I want to ask, does Nigeria have any index stock?
No, Nigeria doesn't have index. Nigeria doesn't have index. Index is like the ones I showed you guys.
Okay.
S&P 500,
So,
Dow Jones and stuff like that.
like, most of us here, all of us here are in Nigeria. So, is there any way we can invest in the S&P 500 and other international stock?
Of course, now that's why I'll send you a video. You use Bamboo. I'll send you guys a video on how to get. You can get you can get US stocks from Bamboo. You can also get Nigerian stocks from Bamboo.
Okay.
Exactly. So I don't know if
Um,
okay. Are you done, Big JP? Are you done with
no,
your
ma. And thirdly, like, what's the minimum of the amount we can invest in this stock trade? Like the minimum amount.
5,000 naira? You can invest at least 5,000 naira. That's what you
Okay.
can invest. But if you want to start investing in US stock, you can like make it up to $5, and $5 should be around 6,005 or 7,000. But if it's Nigerian stock, you want to buy at least 5,000 naira.
Okay.
At least
Thank you,
5,000.
ma'am.
Yeah, sure. So is there anybody else? Okay. Crystal, yeah.
Yes, please. Good evening, and thank you for the amazing presentation we've just had. It's really, really an eye-opener
Yeah.
again because helping us to know that we can actually diversify investment. I think it's a good one to go.
Yeah.
But my question has been partly answered, and I would like to know when you send us this video on how we can actually be making those purchases. I would like to know if there's any provision that you can give to us such that in case, because not all of us are so much technically inclined in terms of how to wiggle our way through buying and being sure that what we're buying is in safe hands. Because
Okay.
I'm saying, man.
Yeah.
So I wouldn't know if there is any support or assistance you can give because after this training, I don't know whether we will still be having personal chance of contacting you, or maybe there's a group whereby genuine questions can be dropped there that it will be attended to. So I think that is another thing I would want you to help us look into. Is there any way you can help us in that regard?
Okay. First, let me answer it. Okay. The first question says, okay, now what you're not need to do is, so long as I'm giving you an app Bamboo, which I said I will send you videos on how to
Okay.
go about it. So definitely anything you are buying on Bamboo is safe. Unless you go and start using the ones I didn't recommend. Anything you are buying on Bamboo is safe. Like I said, I already made a video of how to buy on Bamboo and also how to create an account. So anything you are buying on Bamboo is specifically safe. It's not like a confused broker. So anything you are buying there is safe. You don't need to worry, you don't need to bother. All you just need to do is provide your information, verify your account, and that's all. So I don't know if there's any other.
Okay. So Bamboo itself is an app, right?
Bamboo is an app. So I'm going to send the link to the broadcast. You guys will install the app, create an
All
account.
right.
Then for people who wants to buy, can
It's
start
okay.
buying immediately. Sure. Okay,
It's okay. Thank you very much, man.
you're welcome. So is there any other questions from any other person? Okay. Is there any other question? Does anybody else has a question? Okay, Big JP. Okay. All right. Big JP, you can ask. I'm asking you to unmute.
Okay, Ma, please, are we going to have any other class apart from this one?
Okay, no other class. This is a beginner course and it's a one-time thing. So what you need to do is just go through the class and also go through the videos. It will guide you for the beginner stage. Yeah.
Okay, yeah, thank you very much, Ma.
Thank you so much. You're welcome. So is there any other person that wants to ask a question? All right, thank you guys. I will send the video and I will send this meeting is recorded, then definitely you are going to have access to it anytime you want. Then I'll send the PDF and I'll also send the video. I'll send you the link to the videos on how to create an account with Bamboo and stuff like that. So thank you guys for joining and see you guys later. Thank you all. Yeah. Bye. Okay. Right. Mhm. Yeah, okay. Yeah, okay. So stop.